So what exactly should you be focusing on right now? Let's talk about it all. Kick off the show, kick off the week with our friend Michelle Caruso-Cabrera, CEO of MCC Global Enterprises and a CNBC contributor. Michelle, pretty good news on the trade front. But does anything matter except for the Fed right now?
Oh, I think when it comes to the markets, investors are clearly very focused on the idea that interest rates are going down, that the Fed is going to cut, at least at the short end of the curve, right? Let's see what happens at the long end of the curve. That's absolutely the number one focus. I will say the China news and the trade news is important because, while it may not show progress, it shows detente, right? We see the Chinese now, once again, coming after NVIDIA. Yes, NVIDIA's down, but not by that much. And it feels like it's part of that whole tit-for-tat thing that we're dealing with. But progress on TikTok, that's a big deal. It just shows things, maybe they're not going forward very quickly, but they're not going backwards either. And that is, the market just doesn't want to revisit Liberation Day.
Because, yeah, to your point, isn't TikTok, while a lot of our viewers and listeners could give a squat about TikTok itself, it does seem to represent something larger.
Oh, 100%. Because remember, when President Trump was first in office, his first time, he outright banned TikTok under the Emergency Powers Act. And then that failed in the court system because they thought it was too much of a controlling on freedom of expression. But since then, we've got laws passed. I mean, clearly, there's been a lot of national security concerns about TikTok. Whether or not you believe them or not, certainly the Congress passed that law for a reason. And the fact that we're getting to some kind of culmination on what is going to happen with that, that's progress. And that speaks to the larger relationship between the U.S. and China. China
has been red hot as a stock market the last couple of weeks. And I do wonder how much, if any, of this China boom, of this U.S. continued rally, if this is the buy the speculation on the Fed and China, and when the Fed actually cuts rates on Wednesday and maybe makes dovish comments, we'll see, and the China deal gets done, the market yawns because it's already made the move.
That's very interesting. When it comes to the U.S. market, that is very much a possibility. When it comes to the Chinese market, remember, Americans can't really buy mainland stocks. It's extremely difficult. Chinese investors have tons and tons of savings, trillions in dollars of savings. They have a closed capital account. That's a wonky way to say they can't transfer money overseas. So they can't buy our market. It's very difficult. They used to buy real estate. That doesn't work anymore. You can only put so much in a savings account. So I think a lot of what's happening there is pent-up demand for something to do with your money, one. Two, the fact that the Chinese government says they're going to subsidize and do all these things. Let's see if that really works out. But certainly there's a pent-up desire to do something with savings over there.
Yeah, the K-Web, which is one of the ETFs. You can buy ETFs here that represent mimic stocks overseas. Good word. You can buy shares in Hong Kong, but to your point, domestic Chinese shares, you got to have like a local proxy that kind of does it for you. K-Web has been hot, still well off its highs of 2020, but it's been on a pretty good run. What could screw this all up?
What could screw this all up? If the economy in the United States turns out to be weaker than people have expected, because there's been predictions for so long about some kind of recession, and yet we don't see that happen.
3 out of the last 2 recessions have been predicted by economists, Michelle.
I know. That's right. What could happen? Now, China's very interesting. You know, we got economic data out of China this morning. That was, once again, weaker than expected. That economy is not growing as much as it could be or should be. And that government could still continue to make self-inflicted wounds that prevent it from growing.
Yeah, and we're going to talk about energy in the next block with Francisco Blanch. But there's a lot going on with Russia and Putin, Ukraine striking inside of Russia this weekend with drones, hitting refineries. President Trump saying, I'm going to ask Europe to levy huge sanctions, real sanctions on Russia this time. It feels like the U.S. stock market is ignoring all of this.
Yes.
And I wonder why.
Well, one, because the economy continues to chug along. When you look at all of the other economies in the world, we are still growing faster, despite the concerns we have about a potential recession, despite the concerns about what was happening at the long end of the curve. Europe can't get out of its way. It can't do enough to grow. They want to grow. They want to spend more money on defense. They want to change. But politically, it's extremely difficult for them to do. That's why the French government fell.